Hi there. Today we'll look at a demo for a semi-detached house of a purchase price $209,000. Note, all of the data used in this example is accurate and from a real-life property that was purchased. Please seek professional financial advice from your team, your realtor, broker, accountant, lawyer, home inspector, to have accurate inputs. From your realtor, the property taxes will be $181 per month, and the hot water tank rental will be $17 a month. From your mortgage broker, the pre-approval at 3.95% rate for 35-year AM and 10% down payment. Mortgage insurance for investment property is 5.15. The lawyer will give you closing costs of $1,250. The insurance broker will give you property insurance for $46 a month, and the home inspection cost will be $400. Choose from the drop-down menu, Semi-Detached House. Type the address of the house. Enter the asking price and the appraised value if applicable. Then enter the purchase price, the loan term, the interest rate, the down payment, and the mortgage insurance rate. Then input all operating expenses. Note, monthly mortgage amount will be self-generated based on the financial data entered above. Then enter the insurance, property taxes, rented equipment, condo fees. In the income column on the right side of the screen, enter the amount of rent you'll be collecting. The information entered will populate the summary window. Have a look at the summary window. The cash flow, down payment, closing costs, and the annual return on investment are all listed there. This will give you a clear picture if you should proceed and possibly purchase the property. Let's look at the summary. At 10% down payment, the cash flow is $136 a month. The down payment is $20,900. The closing costs are $4,240, and their ROI is 50.61%. Note, the estimated annual appreciation included for the ROI is 3%. Look at the same example with 20% down payment. Input the 20% down payment and the 0% mortgage insurance. Everything else stays the same. Please check the summary and see how the cash flow and the ROI have changed. Here's the summary comparing the 10% down payment and the 20% down payment. At 20% down payment, the cash flow is $271 a month. The down payment is $41,800. The closing costs are $3,465. And the ROI is 28.18%. Note, the estimated annual appreciation included in the ROI was 3%. Now let us look at the same example with 5% down payment. Input the 5% down payment and the 6.9% for the mortgage insurance. Check the summary. Here's the summary comparing the down payments of 10%, 20%, and 5%. At the 5% down payment, the cash flow is $73 a month. The down payment is $10,450. The closing costs, $4,561, and the ROI is 95.79%. Note, the estimated annual appreciation included in the ROI was 3%. The overall summary: the higher the down payment, the higher the cash flow, and the lower the ROI. On the same token, the lower the down payment, the lower the cash flow, but a higher ROI. Amortization schedule. Simply click on the Amortization Schedule tab at the bottom of the screen. How much principal and how much interest are you paying on a monthly basis for this property? The amortization schedule will give you a monthly breakdown of your payment as principal, interest, and balance. This is very important for two reasons. One, equity buildup is the amount of principal of your mortgage that your tenant is paying you each month. Two, the interest portion of the mortgage is tax deductible and can be written off each year. This concludes the demo tutorial. Start building wealth today with the best real estate system available. To order, please visit us online at www.resus.ca.